Just ask around and you'll see the truth. Always look for the truth of the situation. Anyway, lots of stuff in Trading the Open. And I've done over 7,000. I'm probably up to 8,000. Let's see, 831. Well, at least I'm over 7,000 trades I've done this year. I've done 7,600 real money trades, and here's P&L proof. I got the commission bill to pay for that to show for it, right? There's so much money to be made, but you got to take your shots. If you're under trading, which most of you probably are, you're probably under trading choppy charts with weak signals and taking big stop losses, and your account goes down, and you don't tell your wife or your husband about it. You conceal your trading losses. You're frustrated as heck. Been there, done that, got the t-shirt. How many of you have ever taken stop losses and maybe kept that information from your family members? But when you get a win, you go tell them. That's kind of like par for the course. Don't be that trader. Be more consistent in your wins. And celebrate break-even trades as wins. Break-evens are wins. Small stops are wins. Big stops are epic fail. By big stop loss, I mean anything over a few $100s. Don't learn trading from anybody that says or that shows or whatever they're taking $1,000 stop losses. That's an epic fail. What you want is tight stops, spray the market, make sure you're doing things the right way. Anyway, let's get underway with today's session. Where is the starting? All these real trade examples, right? So, welcome to our Trading Week Ahead broadcast. I'm Ken Calhoun, Day Trading University and Trade Mastery, coming at you live here on Saturday, September the 14th. It's a real thrill to have so many of you here. Looks like our numbers are holding steady. Thank all of you for the referrals and making this the #1 top attended webinar series in history for the entire trading industry that I've seen, at least. Who else has those kind of numbers, right? That would be nobody. So thank you very much. I sincerely appreciate your interest. All information is for educational use only. Blah, blah, blah. Okay, let's say a good technical term. Blah, blah, blah. They teach you that in professional speaking school. Say blah, blah, blah. It's a little humor there. Ding. All right, so what's going on with our stock market? Remember I said this, because I'm so good with my calls. I'm very humble too. My wife is like, you should be more humble. My wife is from Japan. She's wonderful. We've been married almost 21 years now. A great woman. 21 years with the same person. Anyway, I'm not humble. I'm proud of you folks for being here. S&P, we got a 25 basis point anticipated cut from the FOMC coming up Wednesday with China trade fears, inverted bond yield, and all the rest of the shenanigans going on out there. It's a very fragile rally we've had this last week or so, and a surprisingly strong one. Remember, the faster they run up, the harder they fall. How many of you anticipate a potential reversal in the market? I mean, there's going to be some of you that think the market will keep running up. Maybe a few of you think the market goes sideways, that you'd be wrong. Well, actually, August was all sideways, so maybe you're right. How many of you think the market's going to go up? How many of you think the market's going to go down? I think they'll do both, right? But how many of you, I guess the question is, how many of you believe that the market may well do a sell-off sometime in the next few weeks, or at least a pullback? If you're like most professional traders, you would think that's on the. A lot of you agree. Okay, hey, good to see it. Well, Bob, thanks. You're saying the report comes out at 2 p.m. East. Oh, okay, thanks. Normally I thought it was 2:30. Well, maybe it's 2. Okay, thanks for that. Look into that. Anyway, we've got the FOMC up to bat coming up Wednesday. Be on the lookout for that. The expected pattern is likely what we're not going to see. The expected pattern in the stock market is a little false breakout and then a drop. That's what everyone's expecting. That's what we got all year long, right? Every single time the S&P's taken out a new high, the dang thing's dropped, right? We got a new high breakout here over the previous high. Epic fail. New high breakout, fail. New high breakout, fail. New high breakout, everyone expects a fail. I expect that's not going to be the case. What I expect is something a little more complicated, but not too much more. I expect a double. How to say, you've got to be smarter than the average bear. And thanks, Bob. I sincerely appreciate that. If the FOMC is at 2, I appreciate that. I will double check on that. What I expect the market to do, if I were a betting man, I've traded millions of dollars worth of stuff. I expect we will get a new high that'll do a pullback and everyone will say, aha, this is the beginning of the big sell-off. No, it's going to be a false breakout that'll do a small pullback. Then likely it'll squeeze up, that'll fake everyone out, and that'll be the false breakout. So it'll be a double top. The market's going to do this. Remember I said this. It took me decades to learn all this stuff. I wish I could draw up over here, but the stock market's likely to take out a new high. Again, kind of mentally put this over here. A new high, it'll crash, it'll pull back a little bit under this high, like down to 3,000, 3,010. Everyone will think that's going to be one of these. They'll be faked out. It'll take out another zigzag high up here. It'll be even higher. And that will be the false breakout. Everyone will think, oh, the market's going to rally. I got faked out here. And in fact, that will be the false breakout. And then you get the big crash. Remember I said that. If my life depended on it, that would be the pattern I would bet. I think we'll get the expected, what people think is a false breakout. And for all of you who are, the CNBC commentators who are watching and all the media folks, feel free to reach out to me if you want to talk on the phone. I'm happy to do that. We're likely to see a small false breakout that pulls back. Everyone says, aha, see, I knew it was going to be a false breakout. Fake out. It's going to run up again. People say, oh, crap, they're going to cover all the shorts, get squeezed. And that'll be the false breakout. And then it'll crash. That's what's going to happen. I firmly believe that. Anyway, let's take a look at what's hot, what's not, and how to trade it. I don't know how many of you took my winning peer call. 520 was the alert that I issued to my swing scans. I believe it's my swing scans or my live room members. And I told you folks, I think about it, that it would be a good bounce play. And I was correct. And I traded that in and out. Buying at 520. Selling at 918. That's one of the biggest percent gains. I'd started this off small ball, just 70 shares, only made a couple $100, but it was a good trade setup percentage-wise. I was in at 522 for a 2-day swing trade and out at 918. And since then, so I sold 918. I'm currently not in this instrument anymore. I sold right there. And the reason was I broke the 100 SMA, right? That's the exit target. That was my exit target for the swing. So I did that, and now it's dropped back down again. I may buy it again if it. Actually, I don't think I'm going to buy it again. I played the bounce. I came, I saw, made the money, so that's good. It may be worth a shot at new highs, but I'm not going to take it. Other good instruments for our current markets. So that's my S&P forecast. Is you get like a double top false breakout thing going on. So what you want to do, how to say? If you're a swing trader, for day traders, we trade every single day, no matter what's going on. But for swing traders, you want to see at least 2 days green before you get into a position. Okay, so I don't know. Here's a good example: a Tarrant Hovnanian, right? HOV. You want to see this pattern: a small followed by a large over body candle, 2 greens, breaks a 100 SMA, and it's off to the races and runs up 50% from 10 to 15. I believe I had mentioned this one for you guys last week, so congrats if you took it. HOV's nice. Doesn't look too good lately, right? Some red candles, melted candles, bearish topping tail up here. Next long would be, again, this is not trade recommendations, but at least where I'm going to look at it is I will personally be likely buying this if it breaks over, say, 1730 or so. So if it does take out a new high, it may be good to 20, and I'll sell right under 20. But anyway, this guy came from a base of 6 up to 16. The trading range is spectacular. You could make or lose a lot of money the wider the trading range. A quick tip for all of you trying to navigate your path as a trader. You're really trying to figure out how to match your own personal skills and resources and timing and attention, and how much effort you have to put into the market to make money with it. Test out and experiment with different types of trading strategies. Maybe very short-term swings, like overnight swings, like a 2 or 3 day swing trade works well for you. Maybe you're better with a longer term, 2 or 3 week swing. Maybe you're better as a day trader, and within day trading, you can do open range breakout trades of, 4 or 5 minutes, well, a minute or two, up to around 15 minutes, 8 to 15 minutes or so is my sweet spot. ORB breakout trades, like gap and go continuation runners, or and try intraday swings, where you buy the high of the day of an instrument that's starting to run. See, who was hot yesterday? Fran was a good example. And I knocked it out of the park for my swing or my day trading live room members yesterday. And Fran, this guy ran 14 to 1950, right? You may put on the trade buying high of day like 9:30, 9:45, and then sell it at 3:30 or so, right into the close. So intraday swing trading, where you put on your trade early in the morning and sell it later in the day. So you're not there. You don't have to be one of these young kids trying to hotkey into your trades and play it like a video game. That's not how to day trade. You don't put on thousands of shares and hope you get it right, because for every time you get a winner, you'll probably get stopped out a few times. So you may want to experiment with that. But you would not want to trade thousands of shares. That'd be an epic fail. Don't do that. I've even got sound effects. That's cool. Anyway, the point is, day trading charts, you want to look at ones that have big ranges like this and large volume and really good volatility. And this is a pick that I'll be covering with a specific trigger for my Swing Scans members coming up in a few minutes, in around 15 minutes. But anyway, look for charts that are attracting new institutional volume that are likely to make you money. Stop trading charts that have relatively quiet volatility. You want to trade charts that make sense. Micron's been a favorite in our live room for a long time for a variety of reasons. Good for both day and swing trades. One of our semiconductors. Micron and AMD are our two favorite chip makers, and you can see why. Look how far this thing has ran over even the last couple of weeks. It's gone from 42 to 50. Now, what's a bearish sign here? We got a shooting star here, right? So that's a bearish reversal telling us we don't want to buy unless it breaks out above the previous. Trying to draw a line right over the top of that, somewhere north of 51.50 or so. Personally, I'm going to wait till it breaks over 52, but it's got a really good volatile profile. You owe it to yourself to make money for yourself and your family. You owe it to yourself to learn from people and know what they're talking about. You owe it to yourself to keep really, really tight stops. Kind of like the new Aladdin movie, which I'm a big fan of. My Amazon review is number 5 in the world. Just like John Wick 3, another great movie. Headshots with Halle Berry and dogs. What more can you ask for? Which movie do you guys like better? These are my two favorite movies of the year. Completely opposite genres is the new Aladdin movie with Will Smith and John Wick with Keanu Reeves. Which of those two movies, if either, do you like better? John Wick 3 or Aladdin? Curious. Really, I like them both for different reasons. But anyway, the reason I say that is as a trader, you need to make decisive action. And so you got all this enormous power as a trader. You got all this capital. So what I'm waiting for, this is the audience interaction portion. It's completely unrelated to trading, but it's a fun topic anyway. So what the heck? Type in the word Aladdin or JW3. I'm curious. I love both of those movies. They're both really my favorite two movies of the year. But I digress. The point is, I had a point in there somewhere. You got all this power, like a genie, squeezed in a little tiny living space in terms of the correct path for how you can make money as a trader. It's a very narrow path you have to take, and you have to take a lot of shots at it. You're looking at capitalizing on directional volatility by entering and exiting your trades carefully. Wow, a lot of answers. Yeah, Hunter Killer is good too, Matt. You're right. Great. That's my favorite sub movie lately. I even like that better than Red October with Sean Connery is my favorite actor, but yeah, Hunter Killer is a great movie. You're right. It's a great sub movie. It was highly recommend. It was really neat with the Russian submarine captain on board and trying to avoid it was a really good action movie. So, hey, Guillermo, thanks. Hey, Rabi saying John Wick 3 was my favorite of the year. Wick 3. Yeah, look at my Amazon reviews. I've got the number 4 review in the world upvoted for John Wick 3. I've got the number 5 review in the world for Aladdin. And please upvote my reviews so they can go to number 1. Just like I've got the number 1 review in the world for Sade's Love Is Found, I think, her most recent DVD. Like 500 out of 500 reviews, mine's rated number 1. Not that that's related to trading. Let's get back to it. In trading, anyway, we're looking for being decisive. And like a John Wick 3 or something, maybe when you start off trading, things seem like they're mysterious, they're confusing, they're frustrating as a fudge sickle, right? Shut the front door. Trading can be frustrating as heck. The way to avoid frustration is to trade smaller size and trade more frequently with tighter stop losses. That way you can buy yourself so many chances to get it right. I mean, so many winning trades I've had this year. And now, granted, I'm kind of like a really active trader. Over 7,600 real money trades this year alone. I alone in the trading industry that I know of in terms of educators, I don't think any other educator in the entire world has done this many trades this year. I've not seen any evidence that anyone trades more than I do. I trade more than any other educator I've seen in the world. And the reason I do that is because I like to make a lot of money. But the other reason I do it is I like to test. I'm a big fan of testing and experimentation to find out what works the best on behalf of my own trading account, to build it like a son of a gun, but also for you folks, so I can test out trading strategies to share in my various alert services in my live trading room. So, you know, I'm a busy beaver. I love trading. It's what I do. I'm a trader. 20 years now, over 20 years now. 21 years I've been a trader full time. So it's exciting. Anyway, looking for charts that make sense to trade, that have consistency, is another quick tip, like this MGI chart. Despite now is a good time to be out of it, of course, but on the way up, this guy, if you do trade cheap small caps, that's fine, by the way. Stocks under $10 a share should generally not be day traded because they're inconsistent and choppy and they get circuit breaker halts and they are often front run and manipulated by these moron young guys with hundreds of people in a chat room that they front run. They'll buy thousands of shares and then they'll tell everyone that they bought it. That's very dangerous. You never, ever, ever, ever want to be in a chat room like that. Swing trading, the cheap charts that have consistency, is a really good way to leverage capital, like I did with the Pier 1. And my biggest percent gain of the year, I think, buying 5, selling 9. Wish I had done the whole account, right? But just made a few $100. Look for consistent patterns, things like my acceleration ramp pattern. You got a steady uptrend that then hockey sticks into a larger, faster breakout, right? Swang. At least a few days in a row. Now, what's the story of this stock? Another quick tip before we wrap up here. I'm about out of time, so I wanted to thank you for being here. Where is another quick writer downer? Use your Mont Blanc pen, if you have a Mont Blanc pen, or if you don't, use your cheap budget pen or whatever. Write down the thing that you want to look for, the largest green and the largest red candle location on a 90-day chart. Largest red candle on this was yesterday, so it'd be a good time to sell it, right? You would not want to hold this over the weekend. We had a red candle warning here on Thursday, a drop under support. That would be a sell signal right here at the 540, 520. Biggest red candle is there, so that thing's under selling accumulation, right? But anyway, on the way up, it was a good runner. It tripled. It went from $2 a share to $6 a share. But the way you want to make your money in trading the inexpensive stocks is gradually and strategically. You don't want to try and throw thousands of shares at a haphazard up and down chart and that's not how you trade. Not if you're going to last 20 years like I have. If you want to make it as a trader, if you really want to make it and you're tired of screwing around and you want to get off your butt and actually do things, you need to learn the patterns. But beyond the patterns, you need to learn trade management, and so, kind of like being a Vegas odds maker. You know, if I were running a casino in Vegas and I'm setting the odds, there's a good Instagram ad campaign from a colleague on how a casino has an edge and all that for trading. Same kind of thing. As an odds maker, which is what you are, you want to be the casino. I know so many casino bosses. I spent so many years in Vegas. You want to be the person setting the table yields and the odds, and you're fixing everything in a way that's designed to extract money out of the players. You don't want to be the person on the other side of the felt, and unless you're playing Hold'em. But there's no other way to make money in a casino other than playing poker, right? That's the only way you can make money. Everything else is, the casino has an edge. Craps, pass, no pass, and blackjack, perfect basic strategy are the two best, and baccarat is the three best bets in the casino, but you're still going to lose money. As a trader, we don't want to lose money, either bleeding it out small or large. Either way, that doesn't add up. What you want to do is turn this from, stop making this a dang hobby and get off your rear and finally start making some money. And the way to do that is to develop a consistent series of not only visual scanning criteria for what the heck is worth trading in the first place, but more importantly, your trade management strategy, which absolutely positively has to include position sizing, gradually adding to your winners, gradually scaling out of your losers. Don't make binary decisions as a trader. Make gradual ones. Maybe like with my my dust long. I was buying off the 6. I bought some more yesterday off the 8. I'll buy some more over 10. I'm going to sit out this area. I'll buy again over 13 if it goes up there. That's my strategy. And if it craps out and goes down, I'll stop out if it loses 7. I already know how I'm going to either make money or take a really tight stop. Those are your two options as traders. Well, actually, your third option, which is the unfortunate one, is blow up your trading account. You don't want to do that or take a big hit. What you want to do is figure out ways to make money more consistently by having a more intelligent, strategic, thoughtful, intelligent process to work with. So I hope this all gives you some food for thought, some coaching that'll, like going to the gym, and I work out daily. It's always good to be strong. As a trader, I want you folks to be strong and make some money out there. Don't buy unless you have a really good reason. And even then, make sure you use tight stops. So anyway, that's my thoughts for the day. I wanted to thank all of you for being here. Just a reminder, I do have, again, a no big sales pitch. Join or not, I'll still eat steak and lobster. I'll still be rich. I don't care. I run this business because I feel like it. I'm not going to keep running this business forever either. I've been running for 20 years, training tens of thousands of traders, doing millions of dollars in sales. I'm tired of running this business. So while I'm still here until I sell it, join up and learn a thing or two. A non-recurring, no BS 14-day trial in my live room is only $47. If at no other time in your life you try them out, and you can, even if you've already trialed it, normally I say only one trial per person per life or whatever, I'm waiving that restriction. So even if you're one of the hundreds of folks who've trialed it this year, you can retrial it. And this is a non-recurring. So for $47, you get 2 weeks of access, and I'll automatically, it automatically stops at the end of 2 weeks. If you want to join after that, you can rejoin using one of the links on the site. But anyway, that's a really good way. Only $47, you get to hear my day trading and swing trading tips for the next 2 weeks. I highly encourage you to do that. I've also got a couple of partner links that are in the chat box for candle charts. I've got a really good special going on for lifetime access that's good through Sunday only. And Metastock, I'm speaking at their summit next week, and the links are in the chat box for that. So anyway, thanks so much for being here. I do appreciate it. I wanted to wish you all the best for a exciting and prosperous trading week ahead. We've got lots of good charts to work with. And as you're looking at trying to make more money, try and figure out the difference between what you're currently doing and just a few small incremental changes that can start shifting you slowly, safely, conservatively towards a more profitable trading approach. I'm Ken Calhoun. Thanks for being here. And don't buy or sell until you see charts that make sense And even then, don't trust anything out there. Don't trust any of the charts. Expect they're going to go against you as soon as you buy them. How do you still make money with that going on? Well, you got to trade more instruments, and the ones that do work out, you scale into. The ones that don't, you take tight, quick stops on. And that's how you trade. Thanks for being here. Oh, hey, Bill, the links are there. If you guys need the links, I sent out an email yesterday for candle charts, and I'll send out a email for Metastock early next week. But do be on the lookout for that. And if you need those links, feel free to hit me up with the email or support ticket. My email is ken@trademastery.com. ken@trademastery.com, and I'll be happy to answer. So thanks. And again, I apologize, I can't read all these. I can't answer all these questions because I got to run, but hey, you and me both, Guillermo. I want to make millions. Yeah, me too. I'm going after that with the ETF arbitrage approach. I contacted via LinkedIn the smartest man I know in the world. He was a consultant at a company I worked with, and brilliant quantitative mind. He's much smarter than I am. I'm really smart, but this guy's like 6 times smarter. He's a brilliant man, and I'm approaching him to see if he can help with the ETF arb approach. But anyway, thanks everyone for being here. Hey Brian, thanks. Saying I wish I were on longer. Well, I've been here for an hour, so I do show up usually at the 9:30 East Coast time or 9:40 at the latest, and here's some swing scans coming up for all my swing scans members. You guys have been great. Thanks for being here.